Hello traders, today is Super Thursday, August 4th, and I'm Michael Boutros. Good to be with you here, guys, for this intraday strategy webinar on SB Trade Desk. Graham with a simple super, love it. Good morning, Adam, Eileen, Mir, Pete, Francis, Graham. Good to be with you guys this morning. So fireworks are in process. We did get quite a move from the Bank of England with the interest rate decision, cutting basis points by 25 and also increasing asset purchase targets to 435 billion from 375. Here's what I'm looking at right now, kind of just monitoring the scenario. Comments are still coming out from Carney, so I'll give you those as they hit the wires. But basically, to put things simply, guys, and we're not really going to get too deep into the fundamentals here, but the BOE is throwing the kitchen sink, okay, at the markets right now. They've increased, like I said, their asset purchases. They've straight up now buying straight outright bond or corporate bond purchases. These are all really extreme measures, obviously in the wake of the Brexit and the concern that the impact will have on the broader economy. So a couple of takeaways from the commentary that's been hitting the wires. Carney says all elements of the package have scope to be increased. That means additional cuts to the main refi rate, additional increases in the asset purchases, says that the BOE can lower bank rate further if needed. But one thing I did want to step away from this is that they did highlight that it's very clear that the lower bound is above zero, which means that as it stands, the BOE does not see interest rates going into negative territory, as we've seen in Switzerland, as we've seen in Japan. So take that for what it's worth. Obviously, the impact on the euro, on the sterling rather, has been somewhat pronounced. Let's jump right into price action. Here's what we were looking at yesterday. In this ascending slope formation, the near-term breakout level would have been 34. Long story short, the bullish invalidation level is 3166, 3175. We're basically breaking below that and checking it as resistance right now. Here's what the 30-minute chart looks like. So for those of you who may be tempted to do anything on this, I'm just going to tell you from my standpoint, I really wouldn't touch this for now until we get into the U.S. Open. If we break back above 3177 and we find support into the U.S. Open at that same region, game plan remains unchanged. I actually still would be looking to fade it. That being said, with this break, you do risk a much steeper drop. Look at the daily chart. Okay, the first kind of level of interest for me would be this former channel support. That comes down near 30, somewhere around 3075, 3070. And then the major support confluence here at 129.26, which is the low day close for the year, and that longer dated trendline support slope that we've been following. So bottom line, below this near-term resistance, I wouldn't be looking to fade this or try to get cute on a long scalp. If we break above, I still don't want to touch it until we come back and test it as support and then play the upside. Other than that, all things held constant, this is bearish sub 3175. Remember, this is an objective weekly opening range break if we hold below this, and we'll be looking for support a little bit lower down towards the low day close. Just as a disclaimer, guys, if we don't get a play on this today, if you haven't taken something already, that's fine. Okay, we'll have a lot of opportunity, I think, for pound exposure later in the week. As it stands, I'd be looking for the U.S. Open to give us a little bit more clarity here as we head deeper into or towards the latter part of the week. Any questions on the pound? Carney says Brexit has created unusual situation. The BOE thinking is fully aligned with Hammond's. Discuss policy options with Hammond. BOE's Broadbent saying at face value, PMI suggests economy is shrinking, and that's an interesting comment or note I was having with some of the other guys here in New York. Data for the UK hasn't really been all that weak aside from the PMI numbers. So remember, the timing of the actual trigger for Article 50 is still way out there. Okay, so the broader impact is yet to be seen. But I do think, from my standpoint, I'd be looking to see if we can pop back above 3170 here and then find some support right back at that region. Can you discuss the tweet y'all just sent? I don't understand what it means. Michael, which one? 618 drop. Okay, let me see. I think Jamie might have just tweeted that. Give me one sec, Mike. Oh, okay. Yeah, this is what he's saying. So let me bring that tweet up. This is the tweet that Mike is talking about for the British pound, and basically what he's saying, a triangle is possible here. So Mike, when we're looking at these patterns, and in actuality, I think he's basically talking about this triangle that we've been following here in the webinars, saying that how it's interesting, or note how the drop from 33.71 is 618 of the 34.79 to 30.55 decline. So he's basically talking about this extension. That's the low. Okay, basically this, Mike. You see that? The 618 extension, 31.10. Does that make sense? He says, gotcha. So to me, I see a double tap. Yeah. Okay, cool. Yeah, so we're looking at that. In actuality, we should probably just copy that to the near-term chart here. Clean up that 786. And we'll leave that 100 for now. Get rid of that. There we go. Clean this up just a bit. And basically, this extension is just a near-term drop from those highs. So if that is sort of the play at hand, this could offer some near-term, some stronger near-term support, let's say. If we do, by the way, get that long exposure, your initial targets would be 32.25. Just keep that in mind. Michael saying, Roger, yeah, the triangle thing just didn't make sense. I got you. No worries. He's basically talking about the extension, Mike, from within the triangle of the reference points. So we're on the same page there. Horace, say, did you just say 3170? Are we there now? Yes, we're checking that right now as resistance. Absolutely. Okay, so if that breaks, Horace, the idea is I would be looking for a drop into that same region as support. Remember, it's daily structural support with that basic trend line off of the post-Brexit low. And it's the key 618 retracement of the entire advance. Okay? This is just from the low that we made in July, from July 26th, so from this low right here. So a nice region of key support that we were looking for, now that we've broken below it, should offer some resistance if the trajectory is indeed lower. Horace, does that make sense? Okay, a lengthy comment here from Michael saying, so I feel good and bad. I was in a dollar CAD trade last night before bed. I said I really feel good about short pound, but then I agreed fundamentally with what you said and avoided pulling the trigger at 133.01 because I was like, it's a bad decision, but I was right. It's a pain. It feels like every time you make a decision or you make a sound decision like at this time, it would have worked out. But the other 99 times that you make a poor choice, anyways, of course, it kills you. Mike, I feel your pain, man. And this is the thing, dude. I can't really hate on anything that you said right now just because, look, with interest rate decisions, Mike, you're basically rolling the dice, man. If you're going to take a real firm stance ahead of an interest rate decision, it's different if you've been positioned for quite some time and you're heading into the release. That's a different story. But trying to front run a central bank rate decision, Mike, the losers are going to hurt a lot better than the winners are going to feel good. I'll tell you that much. So, you know, when you have an inclination that you do want to look lower and then you don't take it and the market moves in that direction, you still should feel encouraged that you were on the right track. It's just that with this kind of event risk, I mean, we're, you know, never going to really encourage this kind of gambling mentality. So, look, Mike, if he came out today and said we're cutting interest rates, we're not making any additional moves to the asset purchases, or if they didn't include corporate buyouts, which is basically the big thing the market walked away with. That market is minuscule, guys. So the amount that they're actually purchasing in corporate bonds really dwarfs. It's a big, big shift. If he hadn't come out with that one extra measure or the increase in the asset purchases, we'd be having a different discussion right now. So, Mike, when we're talking about data releases, when we're talking about monetary policy outlook, this is a variable that really throws a wrench in your everyday technicals. I'm not saying it's going to invalidate the technicals, but sometimes it can trigger moves against our near-term bias. I don't want to, be front-running a move like that. I'd rather be reactionary on the release than necessarily trying to front-run it. That makes me feel better already. I've made at least 90 pips post-news off, so I'm good. Right on, Mike. But I feel your pain, man. I've been there 1,000 times over, so I don't want you to be too hard on yourself. Any questions on the pound before we move off? Quite a monumentous day, let's say, for the UK and for the BOE specifically. Mike, do you see an ABCDE triangle in sterling? Could be. Sure. Yeah. That would entail a move lower still, but at this point, I'm still not going to stress a wave count during these types of market conditions. He said it just ended. Yes. So basically, you'd be saying this is the end of the consolidation before you move before the next leg, but I don't want to stress that wave count right now, Amir. Horace saying possible target for short-term shorts. So for the short side of things, Horace, I'd be looking still at 131.10, that level that Jamie just highlighted. But more importantly, the 618 retracement. This is a longer standing retracement from the advance off the lows that he made post-Brexit. Okay, that comes in at 30.55, and that was the exact low that we made towards the latter part of July trade. So I'd be looking for a soft target at 30.90, maybe take a little bit off there, but the initial or the main target of interest would be down here at 130.55, 130.60. Hi, Mike, and everyone in the room. Amir, great to see you. Just joined the webinar. Don't want to waste your time, but what's your view on sterling? So, Amir, bullish from here or continuation down? Yeah, we just went over it, Amir. But look, basically, I was just telling the guys the levels haven't changed. We broke the bullish invalidation level. So as long as you stay below this, you're at risk for further losses. The only thing that would make me interested in long exposure, it would be if we break through this in the U.S. Trade session and then come back and test it as support to validate the reversal back above this pivot. And that would have me looking higher. But as it stands below this region, it's just a basic opening range break for the week and for the month at this point, right? Still the first 4 days of August trade. Take a quick segue, guys. Here's what this looks like. Yeah, Amir, you're more than welcome, man. Great to see you. Here's what this looks like. Here's the dollar index. And the one thing I just wanted to note here is that you're testing the monthly open near-term resistance at the 38.2, but look at the near-term chart. Okay, really steep descending channel formation. I hate using these. The steeper the formation, guys, typically the weaker the breakout will be, and this is a perfect example of just sort of a drifter higher. Here's your weekly and monthly open, coincides dead on with a real near-term slope. Basically trendline support, parallel off the highs we made yesterday. You can see both converge right now at the monthly/weekly open, 11,944. So if we break above this on some continued pound weakness, if the index is able to really mount an assault above that region, here are your initial sort of topside targets I'd be looking at. Got the 38.2. Coincides very nice with that former 50 line, and then the 50% retracement at 11,999. Base case scenario, guys, this thing sneaks higher into the weekly open than reverses. That's what I'm kind of expecting. I'm not really looking for a broader reversal in the dollar. I still think the story remains the same. Heading into the U.S. Open, I think you risk a move higher, but I would still be looking to ultimately fade dollar strength. Steven, 100%, my man. It's on the list. Wouldn't miss that. CAD tomorrow is likely to be a nice player as well. You have non-farm payrolls and CAD employment. But before we do, any final questions on pound or the dollar index? We'll give you updates throughout the course of the day, guys, if things change on these two. But just use some caution. Okay, the markets are still going to be largely reactionary to all the data, and once the U.S. markets come online, you're going to get that next wave of reaction for the pound crosses. One other trade I do want to go over from today's, some pound triggers by the U.S. Open. Sure, let's take a look. Here we go. Okay, way too stretched. And remember, I think, or Eileen, we've had this discussion before. When you're coming into event risk, I don't want you guys to spend too much time stressing the triggers. It's great if they're there, but you really want to stress the levels more. Why? Because these really emotional drops in price and sudden surges in volatility really tend to skew the oscillators. So while I can say this, on the rebound off of the drop-off post BOE, momentum has held 60 as resistance and has broke back below 40. Same thing here. On the rally, we actually held 40 as resistance on the 5-minute. That's even more bearish. So my point being, Eileen, is when you get this massive drop-off and this huge just plummet drop in momentum, you don't really want to stress the triggers too much. For me, I'd just be looking for a reaction of where the oscillator is as opposed to actually stressing the triggers. Does that make sense? Just because it tends to skew things, Eileen. It's just a real fast emotional move. If you're not going to hit the dollar Kiwi later, hit that please. Mike, I got you. All the dollar crosses are on the menu for tomorrow. Wonderful. Makes sense. Needed to hear that again. Yeah, my pleasure, Eileen. My pleasure. Okay. So that was a good discussion on the sterling crosses. I do want to go over sterling yen, which we also highlighted in last night's piece. I just kind of wanted to throw the bigger picture at you here. I highlighted this on Daily FX as well with a brief update, but here's the nitty-gritty of it. We put this setup together here in the webinar a few weeks ago, and the one thing I wanted to highlight was the severity and the importance of this region right here. I know it's a big region, but so is the ATR here. You're looking at a 70 pip quarterly ATR, probably much higher after this drop. So here's the thing that we need to keep in mind with the pound yen. As Jamie probably relayed to you yesterday in the webinar, I'm on the same page. You guys know my opinions on the yen. I'm really not a big fan of what's going on, generally speaking, with the yen crosses. On the pound yen, though, big ATR, lots of, typically, they call it the dragon, right? Lots of opportunity. The one thing I wanted to highlight is this key support. This is a basic 618 retracement of last month's range, but it also coincides with a couple of interesting things. Channel resistance, tick a parallel to the low that we made in February. We saw the break, instant resistance. We broke back above it last month, opened up this month as support. Basic trendline support off the low was also there, and the 618 all converged right around 34.19. Now on the 30-minute chart, what was interesting is that 33.56 actually completed an exact 1618 extension off of the highs. Boom, boom, boom. And that's kind of where we started to find a little bit more of a turning, a rounding bottom type of situation. Now heading into the release, would you have a perfect range-bound market? Momentum 60, 40, 60, 40, 60, 40. That's exactly what you look for when you see a contractionary range or a flat range, and you look for a break of that as sort of its own opening range strategy in and of itself. Obviously, the break to the downside took us through key support. Now you look to stay bearish back below 34.18. So as long as you stay below 34.18, you're at risk. That being said, from an intraday scalp standpoint, we're coming into structural support of a structure that has held for, well, nearly 3 weeks now. Momentum is in oversold territory, so I would not try to fade this just yet. This is when the market has the most push behind it. A break beyond here looks for support at 31.73. Okay, if you're holding a short on this, I'd be looking on a tag of this level maybe to take a little bit off the table, bring your stops in a little bit, but ultimately I do think you want to look for that stretch into 31.73. If you're not holding exposure and you're looking for fresh opportunities, I would personally be looking for a rebound back into that region of resistance heading into the US Open. for possible short exposure there. Or if we do just collapse lower, guys, don't chase it. We'll have to reassess the situation and look for a rebound to be able to attack that type of scenario. But as it stands, you stay bearish sub 34.18. Okay, and at this point, we're going to bring down the bearish invalidation level from 36.10, where we noted yesterday, to the weekly and monthly open right here. That brings you into basically 35.38. The Dragon. Any questions on pound yen on this Super Thursday? Those are basically the only two pound crosses I've been interested in. I've had someone send me an email about pound CAD. I don't really like it. I like where we are right now in just the fact that we're at a decent pivot in price, specifically 71.40. Basic trendline support off the lows from July 13th. Basic median line support for this formation, also using that same reference point. And in fact, if we tag on a quick retracement off that low, you can see the 786, which is not here anymore, comes in, or the 764 rather, comes in just lower. There it is. Comes in just lower at 71.25. So near-term support here for sterling CAD. The only one thing I want to note, I can't remember who it was that emailed me, guys, but the only thing I wanted to note, I was looking at this earlier before the webinar, is this. Just clean this up a little bit so you guys can take a snapshot if you need. Okay, don't need that anymore either. And bear with me one moment. Let's just see what this pitch looks like. All right, even more support here. Okay, near term, real near term. Oop. All right. Pound CAD on the daily. Here's what I just wanted to note on the daily chart. If you guys remember, this is the chart that we had posted on SB a couple of weeks ago. So basically, that median line was the exact high that we just tagged yesterday. But the push below the 618 wasn't really with too much conviction. Today's drop obviously clears the way for a little bit more of a substantiated drop here in pound CAD. Ultimately, longer term, I am looking for basing, you know, on a broader scale here for sterling CAD. But near term, you know, with great caution, I do want to say that you're coming into a pretty significant support confluence right down here at basically 71.42. All right, so pound CAD for the subscriber who emailed me last night. I can't remember if it was P. But that's basically what I'm looking at. Look for near-term support here. A drop lower, and you're basically looking for 70.50 as a soft target. But more importantly, the actual stretch low. Right here at 69.88. I was kind of just looking at this, guys. 67.55 is the low day close for the year. So on a more, let me take that back. On a much more substantiated drop-off, if we close below this, you have to leave the room, the possibility for another test of that long-standing trend line we came off of. Again, remember this basic pivot in price caught that low. And it coincides pretty nicely with the low day close. Not expecting it to drop this low, but certainly on a break of this key support, there is a risk for a drop to that degree. So long story short, to put things simply, guys, I'm looking for some possibility for exhaustion here. If you get a bounce higher, might be an opportunity into the 50 to try to press a short again. But this is the operative sort of pitch I'll be looking forward moving into the U.S. trade session. Raymond says, looks like you're hitting RSI trend line on the daily chart. So yeah, it's going to be acting as support, right? And that's one of the other things I'm looking for. So the break to the upside didn't. Here's my one problem with this, Raymond, is if this was going to be a viable trigger, I would have wanted to see that break give us a much more substantiated advance. You didn't really get it. It came back and tested it as support and did make a new high. But if the hold is going to be legit, and if this hold is going to be legit in price, this is a great place for it to happen, right? This is a great place for it to happen. So in fact, heading into the U.S. session, let's just put things on the table. Heading into the U.S. session, if this holds as support, a stop against 71 essentially would sort of be the play that you'd want to make, trying to target a little bit more of an upswing type of scalp. But just remember that the session is still very bearish, the sterling. We were all expecting the cut, but certainly not the degree of added measures that the BOE has now implemented with the increase in the asset purchases and corporate buyouts. Raymond, does that make sense? All right. Yes, he says. All right, Raymond. Cheers. Heading into... Okay, any other questions on any sterling crosses beyond pound CAD, pound yen, and pound dollar? Horace wants to look at euro pound. Sure. Here's what euro pound looks like. Yeah, so look, I don't have any near-term targets for you on euro pound. Typically not a pair that I actually tend to scalp very often. Much tighter ATR and on they are sterling pips. But this is what I would say. You're at resistance right now. If this thing breaks, you could see some further upside. My problem with euro pound is I'm not too keen on getting aggressive on a euro long just yet. I think you could possibly drift down a little bit lower before you start to make another rebound in euro dollar. Don't want to necessarily equate them like that, but watch this region right here. 84.90 is basically the key 618 retracement of the range of the decline off last month's high. And then this also constitutes a 100% extension of the ascent off the lows. So my favorite fib confluences, 618 off the high, 100 off the low, dead on. It's now right in line with the highs that we made last week as well. Watch for resistance. At its value, at its face value, it's making an outside day reversal off support. So certainly if we do break through this, Horace, I like a stretch into the next subsequent topside target, which was critical. That's what we were looking for in that rally last month before it failed. 87.09. Just ahead of that, you have a longer standing trendline resistance. Just extending off the highs that you made there in 2009, specifically March. Take that slope. It was the same slope from the high in June of 2011. Take that same slope, extending off the highs from 2008, and it converges right on that 618. So Horace, feel free to take a snapshot of this chart. Let me space it out for you here. This is sort of my operative game plan for euro pound moving forward. Basically, anything that you take, the risk is going to be against today's low. If you break below this region, that would invalidate, in my mind, the near-term up bias. One other thing I'd keep in mind is momentum never made it really below 50. So the constructive outlook for the momentum signature remains. And in fact, if you just tag on a quick support line here, you can still see that it maintains that upward trajectory. Horace, does that help? And here is your monthly open. There you go. He says definitely. Right on, Horace. Cheers, mate. Okay. Any other questions on any pound cross? Okay, let's jump into some of the other crosses here as we head into tomorrow's non-farm payroll. Carney says, by the way, UK banks have no excuse not to pass on the rate cut. It says very clear that the lower bound is above zero. Again, they're starting to recycle some of the comments from earlier on. So I'll hit you off with anything else that hits the wires, guys. But heading into U.S. non-farm payrolls, let's see what the expectations are at this point. So we did get the release of initial jobless claims today, largely in line with expectations. Remember, yesterday's ADP employment report did see an upward revision to the previous month and beat expectations. So expectations for tomorrow's non-farm payrolls are still steady at 180,000. Unemployment expected to fall to 4.8%, while the labor force participation, we haven't gotten the forecast on that just yet. Remember, 62.7 is still levels we haven't seen for some time. Let's show you the last time we had labor force participation at these levels, guys. $78, the low that we hit earlier this year, was a low we haven't seen since $77. Where we're currently trading right now, or where the labor force participation is as it stands, is similar to where it was in 1977. Okay, so certainly that has a huge impact on broader movements in the unemployment rate. That being said, here's what the dollar index looks like. We went over that. First things first, euro dollar. So here's what the daily looks like. The level of which we reversed at earlier in the week was pretty huge, 112.30, 112.26. We'll come back to Aussie Kiwi in just a sec. Here was the last update on euro dollar. Okay, and this was the formation that we were continuing to follow. That was the final target right there at 112.30, 112.26. You can see that you have the media line for the current operative structure off the low, and the same setup that is in euro pound. 100 off the low, 618 off the high, beautiful confluence, and a nice reversal off that level. Near term, you also had a reversal at 60 in momentum. So this is my problem that I was telling you, Horace, about euro pound. Euro looks like it could drift a little lower. So euro and pound weakness at this point, post the release, now you're betting on which one's going to be the biggest loser. Here's what it looks like on the 30-minute chart. Okay. So there was that rally right into that confluence resistance. We saw, again, a break below 70 would have been your initial trigger to take a short on that. You also had a nice slope trigger here off the lows, like this. Okay. And it sent this thing sort of on a drop off, a slow grinder lower into the open. At this point, I do want to take into account this retracement. And we can clear up at this point the reversal day close here, now that we've made a new high. Okay. Okay, not bad. I know there's a lot going on in this chart, guys, so let me know if there are any questions on it. But just a quick reset here, or relook at some of the levels that we're considering. Looking for parallel resistance to offer some support. Now that coincides on basically just below the 111 handle here at the 50% retracement. As we get deeper in time, that's going to be a little bit lower. Near-term resistance in my mind and near-term bearish invalidation level would be back at the monthly open, the weekly open, former parallel resistance, and current basic trendline resistance off the weekly high. That all converges right here. Add to that, guys, the 50 line here that you see in light blue for the broader decline that we're in for this structure. So there's the 50 line, caught a nice pivot last week, the highs. That converges on that same region with the monthly open, with basic trendline resistance, and so forth. So that's sort of the key breakout zone that you would need. A break above that, you're looking again 112.28, 112.30. More significant key resistance confluence is up here. And that's the upper parallel for the descending structure and the median line for the current ascending structure. So let me zoom that out a little bit so you guys can take a snapshot of that. But that's what I would be looking at near term for euro dollar. Heading into non-farm payroll, what are the scenarios that would allow us to get a move here? Well, if the data comes out much stronger than expected, let's say 200 plus on NFPs, I would be looking to fade dollar strength. If the dollar, let me take a step back to the dollar index real quick. So the dollar remains vulnerable here, right? But from a momentum standpoint and a structural standpoint, you do have room for a, sort of a break higher into that 1197, maybe the weekly open before we move higher, before we move lower rather. That's a scenario where if the dollar rallies into resistance on the release, might give you an opportunity to get back on the short side. If the data just comes out super dismal or weaker than expected, you'd be looking for a drop into that key support that we were looking for earlier in the week, basically 11,850. Eileen says lost sound. Guys, can I just get confirmation that we still have sound? Okay, Horace, thanks. Pete says we're good. Kareem says we're good. Okay, it must be just Eileen. Let me just send her a message here. Okay, thanks, guys. So that's the euro dollar in a nutshell heading into tomorrow. The other pairs that you guys wanted to cover, dollar CAD. Who was that for? Steven, was that you? So here's what dollar CAD looks like. And like I said yesterday, dollar CAD, I think, from my purposes, is likely to be more of a chop fest near term. Now, the reason is because I think this thing is putting in a little bit of a consolidation here. You're seeing lower highs, you're seeing higher lows, and heading into an event risk like Friday where you get a double whammy, Canadian employment numbers and U.S. numbers, you're basically looking for a break of this near-term range. Ideally, you get that topside break. Remember, we've been looking for a rally towards 32.95, 33.12, critical area of resistance, which will remain in focus basically until the 15th as it converges on the median line here for the current operative structure we've been in. That's sort of the ideal scenario. Near-term support, you're still looking at it. We basically tagged that 30.10 level, which is the 618 retracement of the advance. And really, if we break below the confluence of the 100-day and that lower parallel, this thing could fall apart pretty quick. So I don't really have a strong opinion near term on this, Steve. All I can tell you is that I'd be looking for a break of this range, and my humble opinion is I do still favor the long side of the trade. But with a day like tomorrow on tap, I wouldn't be surprised to see this thing jackknife into channel support or the lower parallel here, then rip face. I just don't have enough conviction on it, Steve. And this is an important topic too, guys, especially when you're coming into an event risk. You don't always have to trade you don't have to force the trade, right? If there's not a setup there that we're comfortable with, I don't want to kind of induce a trade that is not there from conviction. So there are plenty other setups with the pound and the Aussie, even the euro. I think might be a decent setup tomorrow. For this and the volatility that we expect, I would have wanted to see a little bit more of a clear price pattern heading into that release. But if you put a gun to my head, I would say fade weakness in dollar CAD. In fact, Steven, on a scenario where the dollar rallies, I think this is the pair that you would probably want to trade more aggressively. In a scenario where the dollar falters, I'd be looking for rebounds in the euro. I'd be looking for specifically rebounds in the pound. And even if you're brave enough to mess with the dollar yen, that might be a decent play on dollar weakness, actually. Steve, does that help for the loonie? So the levels remain actually unchanged from the last time that we updated them. Actually, yeah, they have. I'm sorry about that. Yeah, we have a new formation on tap. So go ahead and feel free to take a snapshot of the screen. Dollar CAD 4-hour looks like a triangle. So Kareem, that's exactly what I was just noting. The series of lower highs, series of higher lows does mean consolidation, triangle, whatever you want to call it, could be the play. And in such a scenario, on a continuation, you'd be looking for that to break higher, which is why I still largely like the long side. I just wouldn't put it past this thing on a day where you get both employment data from U.S. and Canada. I wouldn't put it past this thing to see some serious volatility, maybe a spike into the 100-day, then a rally higher. So I don't want to get caught at, getting tagged out of a trade just because of that. So keep that in mind. Bullish invalidation is still at that trendline support, i.e. that 100-day moving average. Okay, I want to jump into Aussie dollar, and then we'll jump into Aussie Kiwi. The 100 versus 200-day moving averages, which provides more support or resistance. So Kareem, the 200 days is typically seen as the more significant of the two. I don't want to say that one provides more support or less support / resistance than the other, right? They both have that potential to curb or to pivot price. Let's just say that. They both have the potential. Which one tends to be more significant? Which one will I put a little bit more weight on? Sure, the 200-day looks back further at prices, takes more price into account, but I wouldn't say which one provides more or less support. I would just say one's a little bit more significant than the other. Kareem, does that make sense? And the 200-day, by the way, is way up here. So it you're still trading within that range of both those major key moving averages. The 200-day moving average right at support at 130 in dollar CAD seems more convincing. Yep, 100%. I'm with you on that. I'm with you on that. It's right here, the 100-day, not the 200-day, Kareem. He says, oh, I was looking at a 4-hour chart. Yeah, so make sure the moving average on the chart is going to be whatever period you're in, right? The daily moving average comes at support at the 100-day. The 200-day comes in at resistance. And on all my daily charts, guys, you'll notice the 200-day will always be a dark green, and the 100-day will always be a blue. Make sense? He says, yep, all right, cool. So that's dollar CAD. Here's what Aussie looks like on whole. A little bit of a chop fest, but we've been ripping this thing all over the place. As you can see, the levels have worked out pretty well. Obviously, the RBA drop-off came right into the lower parallel. Really nice rally right off that region. We just missed that 100% extension by a couple of pips here before pulling back into near-term support. You're likely to see this thing go into range-bound activity, heading into non-farm payrolls, that quiet lull, sap of liquidity. I'm not really expecting too much on this heading into tomorrow. Retail sales data actually offered a little pop, even though it missed last night. Again, another reason why we're following price action. not just following the data prints. But you saw that pop last night take you right through, and again, punching through the weekly and monthly opens, coming back and checking it support. Still like it higher. Still like it higher, targeting 76.87. Near-term bullish invalidation level. At this point, I'd feel comfortable raising it up to 75.70. Okay, and what would make me bearish would have to be a break back below, essentially, that basic trendline support on the daily chart that we rebounded off of this week. Okay, so likely to get some more kickback back and forth here. Don't be surprised if it spills back into key support. Largely speaking, we're still looking for that rally towards soft target at 76.76, but really you're looking for 76.88. 786 retracement, the upper parallels. Longer term, you're also looking at this trend line here. So a nice, if not by momentum, at least near term, nice clean levels here for the Aussie heading into non-farm payrolls tomorrow. I missed the entry on the Aussie dollar. What is another good entry on this trade, says Kareem. Francis says, cool. Can you please take a quick peek? Oh, okay. I got you, Francis. You're more than welcome. Kareem says, would be a good entry. So 75.71, when I say that's the bullish invalidation level, Kareem, that means it's key support. So in an ideal scenario, you'd find a drop into that region to find some support. The thing that... Is that divergence? No, that's not divergence. So again, remember the discussion that we had yesterday, Kareem. I don't want to just throw out a level there of where to buy at because I want to see what momentum is doing at the time. You have support at 75.89 where we rebounded yesterday, the monthly and weekly open. Key support is at these regions. So both of these levels of area of interest for possible exhaustion, possible long entries. If you don't get a dip and it just rips, there's nothing to do. You sit on your hands, you wait for an entry. We're not going to chase. If you're holding longs, I would be bringing up your stops up to 75.75. If your entry is beyond that, I'd be bringing it up to yesterday's swing low from the Asia session. But you need to look for a pullback here to get back on the long side. Never going to be able to advocate guys buying at the weekly high unless you've made a clear breakout. And even then, it's sort of a chase. But there's no justification in my mind to be buying right at these levels. Kareem says, cool, thanks. Yeah, more than welcome, man. Trust me, I get FOMO all the time, fear of missing out, right? And you're just getting kind of irate because you're missing some clean moves. But that's when you tend to make the worst decisions in trading. I can tell you from experience. He says, yeah, with a sad face. No sad face, Kareem. Market will always offer and provide more opportunities. We just got to be awake and ready to take advantage of it. Okay, so that's Aussie dollar. Last but not least, I do want to go over Aussie Kiwi. I know that the swing trades are still involved here. Here's what the intraday chart looked like for Aussie Ki from last night's update. Boom. So as I noted, the long side was looking a little bit more vulnerable. I was flat on this, by the way, as I published this, even though we did make another high. So I kind of was kicking myself, but it did stretch into new high. It did miss the high day close before sort of turning over, and we finally got to break up this basic trend line, shifting the near-term focus a little bit lower. Here's what Aussie Ki looks like on the scalp. And here's what we look like first on the daily. Anyone who's not familiar with this chart, I don't know what to tell you because I probably showed it to you 1,000 times. But you're basically playing this range right here, a range that has held from the 2014 swing low in January. And within the confines of the descent, still looking at this upper median line parallel, broadly speaking, has continued to cap the advance. Near-term levels of interest, the high day close for last month, that's 106.37. And the yearly open at 106.62. These are your first real major hurdles. If this rebound and the reversal and the assumption that we're making that we put in a very significant yearly low possibly for the Aussie Ki, if that assumption is correct, then this would be your first hurdle and sort of the breakout level you would need to get for the next push higher. Here's what it looks like on the 30-minute. Okay, so as I said, interestingly enough, on the retail sales print, which came in weaker than expected, you got that pop higher, pushing right through. I haven't been in anything since, and this thing kind of dribbled out, just missed the high day close, and even into yesterday, guys. This is what the report was showing, right? I was looking at that divergence, and I was very tempted to take a short, actually. The only reason I didn't is because it's a breakout, right? It just broke a multi-week descending channel formation. You're better off waiting for the pullback to get long than trying to scalp the short. So it's a good thing I didn't, because we actually ended up making a trigger out of that, which broke higher and then inevitably fizzled out, and here we are in the pullback. So I do think you risk a little bit more of a setback in Aussie Key. I do want to get long, ideally. If you're not holding the long with the swing trades at this point, I'd be looking for a move back into the initial weekly opening range, the 618 extension, that gives you a level of basically 105.55, 57 into 105.60, this region right here. And that coincides very nicely with the former upper median line parallel. Interestingly enough, I just want to see what this parallel would look like if we extrapolated it off the highs there. No, don't worry about it. Okay, any questions on Aussie Kiwi? Eileen says, here for FOMO. Yeah, it's not. I wouldn't necessarily celebrate it, but it's something we do want to avoid. Okay, so we did CAD, Aussie, Kiwi, Euro, Pound, Kiwi dollar. Someone had asked for New Zealand. Here's what that thing is doing. Here's the thing with Kiwi. Who was asking about this, by the way? We've gone through a lot of questions, so I don't want to waste time scrolling through. But here's what the Kiwi's doing. I personally, not a big fan of where we are right now. I know that, I think Jamie is looking for a possible short exposure on the Kiwi dollar. I think he's on the right track. I do like it broadly lower. If you guys remember, we were talking about the possibility of this making a push higher and sort of setting up a possible near-term head and shoulders formation for a break lower. I still think that's the game plan, and the only thing that's sort of reinforcing for me in recent price action from an intraday standpoint was the fact that we not only broke that median line, which also was a convergence of the weekly and monthly open, but now we've gone back and tested that as resistance and moved lower. So in my mind, that's sort of a good indication that you're seeing momentum start to turn over. Add to that you had, that building divergence into the highs you made last month. Now that could have been, the decline. That could have been the signal. But on this rally, where's momentum finding resistance? Yet again at 60. So there's a lot of indications here for Kiwi to actually be a little bit more on the softer side. That would certainly help our Aussie Kiwi long. And one of the reasons I still like the Aussie Kiwi long is because, in fact, of the two, right, heading into non-farm payroll, if you don't necessarily want to be short the dollar, I think this would be a good match, because of the two, I would expect, even if they both decline, Kiwi losses to outpace that of Aussie, and that would give you an upside bias on Aussie Key. So long story short, the major support that you need to kind of get through to get this thing going is still down here at 71.40, where we highlighted yesterday. No change. I would bring up a near term a little bit higher to 71.50 just on account of that confluence, but this is still the range lows for the week. and it's still sort of the break that I would need to validate a move back into that descending median line formation, which essentially caught the lows and that pivot midway through the rally here before the inevitable rip. So let me clean this up just a bit. Don't think really you got to change too much. But that's sort of what I'm looking at there. Feel free to take a snapshot of that if you need it for future reference on the Kiwi dollar. Any questions on Kiwi? All right, we are running right towards the latter part of the session. If you guys have any other pairs or trade setups you'd like to review, please feel free to throw it on the message board. I did see a question here on gold. Here's what the gold trade looks like so far in the session today. AMD, are you in the room? I did get your email yesterday on the gold chart. It looked really good from a near-term standpoint. I don't really follow it as closely near-term, but that looked pretty clean. Here's what it looks like on the daily chart. Guys, former resistance still going to offer some support, and that's still the major level that you need to break if this thing is going to get bearish again. Remember this long-standing 2011 trendline resistance that we're trying to press through. You still have to compete with this parallel for the operative structure off the lows. So I'd be very cautious here on gold, guys. You'd need to either see that dominant stretch towards 1380. It's a 38.2 basic retracement. Or for me, a pullback into channel or trendline support here would be an opportunity. But as long as you're above 1355, I wouldn't necessarily be looking to get too aggressive on the short. That's a big region, important region for gold. Put things in perspective for you there. That's the all-time record high. The crude trade has also been sort of really popular these days as well. You saw a reversal ahead of our target, which was 38.80. But look where we're finding resistance also again here today. 161.8 extension off the highs. That key butter zone still in focus as resistance, former support. Still possible stretch down to 38.84. That median line for the multi-year formation that we've been holding in crude. In fact, if we parallel this off the lows, hey, even better. Questions on crude? And I do want to just touch base on EuroCAD. This is a scalp that we highlighted on, what day was that? Tuesday. We've gone through 4 of the 5 targets. Here's what it looks like, or here's what we look like earlier in the week. Okay. And this thing was coming into structural resistance here at 47.28, and we were noting that the long side remains at risk while below that region. Well, that's exactly where this thing turned. 47.28, we got the tag of it before the thing started to collapse. You got 46.37, 46.45, another pivot target at 45.85. That hit. The next one is basically the monthly and weekly opens. We're sitting there now. Here's a basic area where I would actually start to possibly look for some new support and long exposure. This is just a simple pivot in price, and you're also looking at the 50 line for that current operative structure off the lows. So as far as EuroCAD is concerned, it's very, very clean. The levels haven't really been compromised at all, and you're still looking lower as the correction continues. Again, possible long exposure. 45.85 was sort of the level that we wanted to see, as well as the weekly open. Now that we've broken below that, you have to leave room for a little bit more of a decline here for EuroCAD before it turns, which is why the same thing for pound CAD, right? You can see pound still a little bit weak, CAD finding a little bit more strength to drive both of these a little lower before you start to look to take a little bit more of an aggressive approach to the long side. All right, and that brings us into 9:31 and wraps up the webinar sessions for this week, guys. We will be back. There will be no webinar on Monday. I will be out starting tonight, heading down to DC for a few days. So I will be back next week with an update on Monday night, and then we'll bring up our intraday strategy webinars again starting Tuesday morning. Best of luck trading. Watch NFPs tomorrow. I will be online giving you an update as soon as that hits the wires. And use some caution on the dollar crosses, guys. And specifically pound dollar is going to be very vulnerable to some serious volatility over the next 24 hours. Best of luck trading. What's up, Mike? I'm still here. He says, wait, one more. Can you please next time or soon go over a webinar about trading, lifestyle, and stuff like that? What do you mean? What kind of questions do you have on lifestyle? Besides the fact that I don't have one aside from trading. Just kidding. But yeah, I mean, you're in the right place, Mike. You can feel free to ask any questions that you'd like in the webinars. And we're always open to catering any type of comments or topics that you guys specifically want to discuss. He says, like not lifestyle, but like being an actual trader as a job, etc. Full-time beyond just, oh, hey, here's a chart. Like we think I think we're all down with the charts. Where's a good place to find weekly and monthly open data, Steven says. So if you go to Trading View, you can actually download this indicator, which allows you to basically object tree, which allows you to basically add the weekly and monthly open. Here it is. Yeah, here it is. It's called CM high underscore low underscore open underscore close. It's created by Chris Moody. That's what you need to look for. So in Trading View, if you just click on indicators and search for it, it'll actually come up right here. And that is where you can find the monthly open, the weekly open, anything for MT4. I don't really use MT4 anymore, so I couldn't really tell you, Horace, on that front. Michael says, for sure, though, I'll prepare a list of cues. Thanks, bro. I love you guys. Love you too, Mike. And again, always feel free to ask any questions here, guys. And, you know, Jamie and I have been doing this for well over 11 years at this point each. So, you know, we're always willing to share our experience with you. Good luck tomorrow. Have a great weekend, and I'll see you guys next week. Cheers.